evening, everyone. A very warm welcome to each one of you, and thank you for joining us tonight for the finale of the 9th edition of Evolve, a knowledge series for MSME by Axis Bank in this vibrant city of Mumbai. I'm Tina Thomas, your host for the evening, and it's my honor to host the finale of Evolve, which has continued to grow bigger and better since its inception in 2014. We are grateful for the trust and the support for all our MSME clients, having reached out to over 9,000 customers across 50+ cities over the last few years. As the financial capital of India, Mumbai is a hub of diverse industries and entrepreneurial spirit. Tonight, we celebrate the resilience and creativity of local businesses that have thrived in this dynamic ecosystem. We believe strength lies in adaptability, and we are here to equip you with the strategies and insights needed to navigate the future. Today's session focuses on future-proofing MSME for the new age, is aimed at building a robust ecosystem and fostering a financially resilient, competitive businesses. Before we proceed, we would like to give you a quick glance of our Evolve journey over the last 2 months.
A very warm welcome, everyone, for the 9th edition of Evolve.
Future Proofing of MSMEs for the new age.
The vibrancy of the MSME sector in India, this is only going to grow.
One of the reasons there is a lot of credit gap in the industry.
I think India is using the internet very smartly, unlike the West, which seems to use the internet mostly for advertising revenue.
How do you see MSMEs now and probably 10 years ago?
I see that really MSME have the best opportunity in the export sector, but they have to focus on the product.
Manufacturing base is definitely shifting from Europe towards Asia. One has to have faith in technology. And when I say technology, let us employ world-class technology.
Adoption of technology for the use of businesses probably is another challenge that we are facing. Only the labor, the quality of people whom we want to imbibe. And second thing is, the correct usage and the end use of that technology to make ourselves more efficient.
But does India need to copy and do everything that China does? I don't think so. So the manufacturing story in India will grow 2 fronts. One is with the domestic consumption, also with what's happening in US, Europe. They want to have China plus story.
Because obviously when you look at the scale at which China operates, we do not have that kind of scale over here. Yes. So we need the infrastructure, we need the push for that.
Yeah.
And if we are able to capitalize on it, I think the world's our market.
So without registrations, we don't want to do that. So my suggestion is that before going to the international market, first of all, you need to do some homework. We need to fulfill the requirement of the international market, because most of these countries, they have local rules, local registrations, and then only you select that market.
It's not the importance of technology's adaptation. Because of the technology disruption, how you operate your business has to change. It is not about just enabling technology to your organization. It becomes part of every business.
There is a need of, let's say, knowledge-based manufacturing, not just based on cost, but any kind of knowledge which is included in the manufacturing process. The world is hungry for it. India is positioned right, in the right way for it, and we combine the cost advantage of India, embellish it a little bit with the technology, some bit of knowledge, that can really give us a lot of returns.
Sure.
It reminds me of last year's Evolve event when there was a deep discussion, detailed discussion on where I also personally learned how, what is the difference between digitalization and digital transformation.
It's our endeavor that we walk step by step with you to ensure that you get all the services from one single source.
I would now like to invite Mr. Munish Sharda, Executive Director, Axis Bank, to share his view on how Axis Bank aims to future-proof MSME for new age businesses.
Thank you. I would like to start by welcoming all the MSME customers to the 9th edition of the Evolve event in Mumbai. I know it's difficult, it's a Tuesday evening, traffic is not very kind. So thank you all for making time to come to this event. Evolve is our attempt to bring all of our MSME customers together at one place, and it gives us a few opportunities to learn from you. We meet customers individually and collectively. We get to learn a lot. I have done this travel now for a few years, and in this year also we've done these events in about 10 cities. It also gives you an opportunity to learn from each other, and we also bring some successful enterprising MSME leaders to the dais to share their thoughts, and it perhaps gives you some opportunity to pick an idea or two which you can take back to your businesses and use them to grow your businesses even more. For us, it's very energizing to meet so many customers. I've traveled the length and breadth of the country this year and met many customers, learning about new technologies, learning about new things that you're doing. At every single opportunity when we meet some of our clients, giving you some thoughts of what you could do to your business to add more scale to it. And so Evolve is our attempt, and we hope that Evolve will continue to evolve into an even bigger and bigger event in the years to come, and help our MSME customers to scale their businesses and make them more profitable. As we all know, MSME forms the backbone of the country's economy. We at Axis Bank, this sector is central to our strategy of building our bank around the MSME ecosystem across all sectors of the economy, be it trade, be it manufacturing, be it services, be it exports, be it local business, domestic business, be any kind of business. We are thinking all the time through all of our business lines to structure solutions and technology platforms to help you do your business more efficiently, provide you resources or funds at the right time, and give you solutions which will enable you to transact your business more and more efficiently. Through our teams which are spread across the country, we are also broken our business into 4 or 5 segments within the bank, so that we look at each segment in a very focused manner and provide you solutions in that particular segment. So be it small businesses, be it smaller enterprises, mid-market corporates, mid-market companies. So as you evolve in your business, our solutions kind of come in handy at every level to give you the right approach or right way forward for your businesses. We'll also at the bank, as you all know, and my colleagues will share later as well, we are a full services institution for your business. Be it not only lending, working capital needs, fee products, trade, forex, etc. We also have a complete ecosystem of businesses which will help you take your business from a startup stage to becoming a listed entity and becoming businesses at scale. So on this end of the spectrum, we have Axis Capital, which is one of the country's leading investment and capital markets company. We will help you raise capital, raise IPO, help you go public, etc. So on this end, and we met a few customers we have today also and earlier as well, whom we have helped to go public, because we understand your business very well to start with, and then we can help you do that. And a whole lot of other businesses that we have within the business, be it a trustee company, be it a NBFC, a mutual fund company, an AMC, etc. We are there to serve you across all segments of your needs. Even for your personal banking, we have solutions, and our MD reiterates it every time, and I'm sure he'll say it today as well, that once we get a customer onto the Axis Bank platform, we don't want you to go out to any other platform for your financial services needs, be it your personal banking needs or your business banking needs, and even in your banking ecosystem, we would want you to kind of stay with us, and we are thinking of those solutions all the time. Many of you in the room are also Burgundy private customers. It's a wealth management platform which is the country's third largest wealth management platform, and in a short span of 5 years' time, we become the third largest and the fastest growing wealth management franchise. Many of you who not yet are customers, we would urge you to look at our propositions on the Burgundy private side for your personal banking, for your employees banking. We have a platform which is one of its kind, salaried banking platform for your employees, etc. So a whole lot of stuff available for you to grow your business efficiently and within one banking ecosystem without any friction. So, we hope that you will, enjoy the evening today. We hope that you will get to learn something from this event. We hope that we'll see more and more participation in your business in the years to come, and would like to wish you all the very best for the growth of your businesses. Thank you so much.
Thank you, Manish, for your valuable insights. Moving on, we all know how critical it is for business to not only know what the immediate factors that can affect it, but also to understand how the market outlook can impact their growth. Today we have with us Mr. Neeraj Gambhir, Group Executive, Treasury Global Markets, Axis Bank, who will share his views on the current global market outlook. With a huge round of applause, we invite Mr. Neeraj on the stage.
Good evening. Once again, thank you very much for being here with us, giving us the opportunity to host you. I'm gonna use a few slides to set the context for the discussions today. Maybe it'll help you, but at least it'll give you some perspective of where the broader markets are looking like and broader economy is looking like. There's a lot that's happening. We know that, right? I'm sure 5-10 years down the line, when we look back at calendar 2025, we'll look at 2025 as the year which has been a watershed year as far as the geopolitics is concerned, the global economy is concerned, and its impact on the broader ecosystem. So, the factors which are impacting global economy, broader markets, are quite a few. First of all, we have talked about geopolitics. We know what's happening to the transatlantic alliance between US and Europe, how it is playing out and not playing out. Emerging markets are at the receiving end of it. We've seen a massive outflow of capital from the emerging markets back into US. Inflationary pressure, which was quite serious and significant immediately after the COVID crisis, has abated, but has not abated fully. It's still lurking somewhere around the corner. And we don't know what the impact of the trade war that Trump has unleashed on the world will have on inflation. There is a massive technological disruption that is going on at this point in time, and that's artificial intelligence, right? The amount of money that is being pumped into artificial intelligence, and I'm sure all of this will have a significant down the line impact on how we do our business and how we conduct ourselves along the line. Climate change is a big issue, we all know that. So all of these factors are coming together to shape 2025. Some of these factors are already quite apparent, and some of these factors will become more and more apparent as the year goes by. Talking about geopolitics, Trump has changed the rules of the game in just about 60 days, not even 60 days actually. so dramatically that it's hard to figure out where things are going to land up. The significant break in the partnership or alliance between US and Europe is going to have a massive effect. I jokingly say that Trump has achieved in 60 days or 30 days, less than 60 days, say 30 days, what 30 years of stagnation in Europe could not achieve, which is getting Germany out of its slumber. And they are now talking about putting 1 trillion behind their own economy, breaking the debt breaks that they have. It's not just in the global economy what's happening. It's within US what's happening is also important. Elon Musk and Doge, we all know about that. Its impact on US economy is going to be quite profound. Just to give you a sense, they have talked about reducing a fiscal deficit by $1 trillion. $1 trillion. Current US fiscal deficit is roughly 7% of GDP. India's fiscal deficit is 4% of GDP. If they have to get down from 7 to 4, they have to reduce spending by $1 trillion. And federal government in US doesn't spend more than $200, $300 billion. That's the amount of spend that they have on federal government employees. A large part of US fiscal expense is on Medicaid, healthcare, and defense. How easy it is going to be for US to get down from 7% fiscal deficit to even a level of 4% where we are today without compressing on things like health spend, defense expenditure, etc., etc. US economy today is doing what it is doing or growing the way it is growing because there is a strong firepower of fiscal spend behind it. Once you take that away, what happens to the growth in the US economy? Those are some of the things which are getting reflected in the markets as we speak. There is a lot of talk of the trade war. Trade war is, nobody knows what Trump wants to do with trade war. Is it just a short-term tactic to get some bargaining going with the counterparties? Does he want to achieve some kind of better revenue source for US fiscal government, for US government to reduce the fiscal deficit that I talked about? What is the end game? It's not very clear. While there has been a lot of talk, every day there is a new tweet. Sometimes it's happening today, sometimes it's happening tomorrow, sometimes deferred for a month, sometimes deferred for a week. At the end of it, so far what he has done is actually imposed a 20% tariff on China. That's the only tariff increase that has gone into play so far. Everything else is just a threat. So how will this threat play out over the next 6-12 months remains to be seen. What will be the impact of Trump's tariffs on inflation in US, the cost of production in US, and what will it do to the global supply chains is something that everybody is grappling with. But one thing is for sure, I think everybody today, if they have to put up a new plant or a new capacity, would seriously think about putting it in a place which seems to be somewhat remote from Trump's tariffs. That rules out Canada, that rules out Mexico, that rules out China, and probably that rules out EU as well. Which countries will benefit remains to be seen. US took its interest rates from 0% to 5% in a span of almost 12 to 18 months, the largest interest rate shock that US economy has ever suffered. A lot of people worried that this kind of medicine of monetary policy tightening would actually bring down the US economy to a grinding halt. Didn't happen. What actually happened was US growth continued to chug on at a reasonably good pace, hasn't come off despite these interest rate increases, but inflation started coming off quite sharply, and that scared the Fed that maybe down the line there is a serious speed bump, and they wanted to avoid that speed bump. That led to Fed cutting rates by 100 basis points, even though from a very objective standpoint, economy was doing very well, inflation was not that much low, rate cut shouldn't happen, Fed did 100 basis points, kind of as an insurance to a future speed bump. And now they have paused. About a week ago, 10 days ago, the markets were thinking that Fed will not be able to cut rates this year at all. The markets were pricing in only one rate cut from Fed. A few data points, markets are back to pricing 2 to 3 rate cuts from US Fed. Every single day, we get a new data point which is resetting the expectations of the market of what is going to happen in US as far as interest rates are concerned. So still, a fair bit of uncertainty as to how the US interest rates will play out. Like I said, Trump has achieved what 30 years of stagnation in Europe could not do. Thank you. Germany's break from its past in terms of coming out of a self-imposed fiscal discipline is a big change in the Europe. It's a huge change. We are not actually appreciating probably in this side of the world as to how big a change it is. This is going to force a lot of German governments to increase spending on defense. It basically means that a lot of European economies which were stagnating because of the low domestic demand, lack of competitiveness versus China, will now start seeing resources being shifted into production of arms, armaments, ammunition, etc. Scramble for technology for defense. This is a huge change for Europe. And this change, in some senses, is getting reflected in the way markets are behaving. Just to take FX market as an example, Europe has jumped almost 5 to 6% just on the announcement of German fiscal spending. And I think it's just a start for Euro, because as Europe actually comes together, hopefully they will come together, and start doing the actual spend, you will see growth coming back into Europe. So those of us who think about Europe as kind of a dead market may not be so dead going forward in the next 5 to 7 years. We know about the structural shift that's happening in China. Very recently, NPC talked about 5% growth target for 2025. But actually, even a 5% growth rate for China today looks like a bit of a stretch and a tough one. Even to get a 5% growth, China will have to do a lot of fiscal spending, a lot of pump priming of the economy to get to that point. So China has a real problem in its hands. Its domestic economy is slowing. It was always an export-oriented economy. They kept on sustaining it on the basis of exports. But with the trade wars, exports are under question. How do you pump prime? How do you bring back growth into the economy? So, putting all of this together, this is what the global outlook looks right now. I think markets are repricing in as to what is going to be the path of monetary policy from here onwards. It looks like US will probably do a couple of more rate cuts. It looks like European rate cutting cycle is coming to an end, because if Europe is going to do a lot of fiscal spending, there is very limited room for ECB to do the rate cuts. Growth projections across the world are changing quite dramatically. US, which was the engine of growth for the world, is actually now looking somewhat weaker. Europe, which was struggling, may actually have a better outcome. Japan is showing signs of significant change from the recent 30 years of its economy. And China will continue to be in a difficult spot. So all put together, we still feel that there is a likelihood of, I won't call it a stagflation, but somewhat like higher inflation and somewhat deterioration in the global growth as the trade wars come into play. The recent downfall in the equities or the correction in the equity market, about 10% in US and about 10% here as well, The key question is that are we at the end of it? If you look at the chart of equities over the recent time, it doesn't look like this is the end of the correction. If US economy slows down quite significantly, there is probably more pain to come. Domestically, I think we've corrected a lot. Our valuation parameters are looking a lot better now. But till such time US settles down and US interest rate story settles down and emerging market flows start coming back, it's very difficult to see how domestic markets will start performing better. Compared with some of the major economies in the world, India is looking far, far, far better. Growth close to 7%. Our own forecast is that we'll be somewhere close to 7% FY26. With this year, we'll close at about 6.5%, so maybe a little bit of uptick from here. Most importantly, and I talked about fiscal deficit in the context of US, if you look at most major economies in the world, they have a serious fiscal problem. The fiscal deficits are running somewhere between 5 to 7%. Their debt to GDP ratios are running north of 90%, close to 100. US is actually 110. With fiscal deficit of 4%, debt to GDP ratio of about 80%, and growth at 7%. India is actually looking a very, very good, India is presenting a very, very good picture for the global investors. At some point in time, this level of growth and this level of fiscal consolidation will start getting the investors back. I think that the problem is that right now there is just so much turbulence in the world market that people are not able to focus on emerging markets. I think once this settles down a little bit, it's possible that we may start getting some of these flows back into the economy. As I mentioned, fiscal prudence is the bright spot compared to some of the large economies. Our inflation is settling down to a fairly reasonably well anchored 4% kind of a level. Expectation for FY26 is that we'll be somewhere close to 4%, maybe a little higher than 4%. That is very close to the target of the central bank. And this basically gives an opportunity for Reserve Bank to cut rates. They've already done one rate cut. That rate cut was a bit iffy. When the rate cut was happening, I think there was a lot of question mark whether this rate cut is actually required, whether we need more liquidity in the system. But as things have played out, as inflation data has played out, it feels like that there is a very high probability that we will get another rate cut in April. So clearly we are going to see some reduction in interest rates in the economy. The challenge that we have is while rates are getting reduced, there is a liquidity shortage in the system. That liquidity shortage in the system will need to be addressed by the RBI on a very structural, sustained basis. Because till such time that liquidity shortage is addressed, you will not see the benefit of these rate cuts except for the automatic reset of floating rate interest rates linked to repo. In a broader economy, the benefit of these rates flow through or transmit through because there has been no impact on banks' cost of funds so far of these rate cuts. So I think addressing liquidity is going to be one of the biggest issues and challenges that Reserve Bank has to deal with this year. As far as currency is concerned, I'm sure all of you are in one way or the other impacted by what happens to dollar rupee. We've depreciated, but we haven't depreciated a lot. We've depreciated just about 3% this year. And at 3% depreciation, we are at pretty much the lower end of the spectrum as far as currency is concerned. There have been economies which have suffered a far serious impact on their currencies. And thanks to a very, very active intervention by Reserve Bank, rupee has been a very well-managed, well-contained currency. Going forward, our thesis on currency is that if you look at it from a very fundamental current account deficit standpoint, it's a good story. Our current account deficit to GDP is less than 1%, expected to be less than 1%. Our problem is that capital flows have actually reversed last year. Capital flows both in FDI as well as in FI flows. So we will be under some kind of a pressure till such time these capital flows reverse. But that pressure is not humongous. That pressure is not obscene as it happened in, let's say, 2013 taper tantrums. This is something that Reserve Bank can manage, and I think they will manage. So we do feel that there will be some pressure on rupee to depreciate, but it is mild, and it is something that will lead to a mild level of depreciation over the next 12 to 24 months. And that level of depreciation, frankly, is good, because it kind of ensures that our export competitiveness is maintained. We don't know what is going to happen to Chinese yuan as a result of these wars. There is a possibility that if there is too much pressure on China and there is too much tariff imposed on China by Trump, they could react by depreciating their currency in a significant way. And that risk is something that the markets are quite alive to. Dollar index, we saw a very significant dollar appreciation in the run-up to the elections and Trump's inauguration in the presidency. But since then, the rapid pace at which Trump has unleashed trade wars and the upending of global geopolitical order has led to two things. One, concerns about US growth, and second, the fact that dollar has started weakening significantly. How this will play out? There is some gossip and a rumor going around about this so-called Mar-a-Lago Accord, which is basically a repeat of Plaza Accord, a sustained depreciation of the currency in a collaborated way between various economies. This is what the markets are talking about. It looks a little bit difficult, given the geopolitical setup, that everybody will come together and agree to dollar being weak. But the growth impact on US of tariff wars is something that could potentially weigh upon dollar quite a bit. And we could see significant depreciation in dollar, particularly against euro and yen as time goes by. So key takeaways. Significant political shift globally. Reshoring, onshoring, redistribution of supply chains at a significant scale across the world. US long-term interest rates, no clear clarity as to where they will settle, depending upon what happens to the US economy. Euro USD, in terms of currency pair, could be one of the biggest beneficiaries of this change, particularly if what Germany has started is picked up by some of the other larger economies like France, Britain, and Spain, etc. We think there is still scope for higher inflation, because as tariffs go across the world higher, it leads to higher pricing, and that means inflationary pressure. Emerging market assets will still be under pressure, because as long as the global markets interest rates stay high, the tendency of capital to leave developed markets and come into emerging markets is much lesser. In the midst of all this, we are actually likely to see some bit of cyclical recovery in the next 12 months as the government spending comes into play. And scope for Reserve Bank to cut rates by another maybe 25 basis points in April. The biggest challenge for us is the amount of intervention that Reserve Bank has done in the forex market leaves a bit of an overhang on the system. Reserve Bank needs to manage this short position that they've created and make sure that this does not convert into a significant sustained liquidity shortfall in the system, which I think they're doing a phenomenal job right now of managing it. So if this is sustained, we will see some benefits of lower interest rates seep through the system over a period of time. So thank you very much. Thanks for your attention.
Thank you, Neeraj, for that extremely insightful presentation. I would now like to invite the MD and CEO of Axis Bank, Mr. Amitabh Chaudhary, to share his thoughts on Evolve, the knowledge series for MSME. Please welcome on stage Mr. Amitabh with a huge round of applause.
Ladies and gentlemen, esteemed entrepreneurs, valued clients, distinguished guests, and my colleagues from Axis Bank, good evening and a very, very warm welcome to Evolve, our flagship initiative designed to empower small and medium scale enterprises with knowledge, insights, thoughts, and financial expertise needed to thrive in today's evolving business landscape. This event has truly become a hallmark for Axis Bank, and obviously we intend to continue to evolve this event over a period of time and make it bigger and bigger as we go along. It is obviously an absolute privilege to stand before you today. As a bank, we are deeply committed to the MSME sector. There is evidence from the kind of numbers we have delivered in our balance sheet growth. Our share of the SME sector has gone up by almost 800 basis points in the overall share of advances. And we believe that not only MSME is a backbone of India, but it will also be a backbone of our strategy as we move forward as an organization. I cannot stop myself from adding a couple of points to what Neeraj said. Neeraj knows 100 times more than me on interest rates and capital markets and FX and all of that. But there are couple of trends which I think are important to understand, at least from a geopolitical perspective, and it is my prognosis, you don't have to agree. One is that whatever Mr. Trump is doing, and Neeraj talked about it, he's definitely forcing a lot of countries to come together in partnerships which they were not planning earlier. So what we are seeing, for example, in Europe, and Neeraj talked about it, is that Europe suddenly realizes that they're not together. They will not be together anymore. I mean, they might be, Russia is actually standing at their door already today. He is forcing a lot of conversations and partnerships, including Europe now aligning more to China than before, because they realize that they can no longer rely on America. America is all about transactions. America is all about America itself, which was not the case earlier. Second, you will obviously see a huge amount of rise in defense spending. Neeraj talked about Germany. Actually, UK has also announced it. You will see more and more European companies doing the same. And let me add the third point, and it brings, you will also see, I think, a lot of small conflicts increase around the world. We are today already living in a time where the number of conflicts happening in the world as we speak are the maximum one has seen after the Second World War. You might not realize it. There is something going on in Yemen, there is something going on in Sudan, so there are a lot of countries around the world where there are conflicts on, and we don't even pay attention to it because they're too small, it doesn't matter. But look at what is happening. Look at what China is doing to, say, Taiwan, or what are they doing to Philippines. Look at the recent statements coming out from India also about, POK or whatever. You will see a lot of conflicts. You will see powers who can manage it, certainly picking up issues which they thought were not possible to pick up earlier. So it will, why am I saying all this? Because it will not only create more volatility, but it will also give you opportunities which you're not imagining today. And it will be very important to keep watching for these trends from a geopolitical perspective, because ultimately, while India is isolated in many ways, a lot of the answers about Indian economy growing or continue to grow at 7% are in India, but it will give you as MSMEs opportunities going forward in the future, which you are not maybe thinking of today, because it is going to happen. Till Mr. Trump is around, at least we're going to have a lot of fun and games every day, but it will also huge opportunities of level. So let me come back to MSMEs now. I do believe future of SMEs in India is extremely promising. The government is saying it. We are saying it as bankers. You believe it. When we meet any one of you, the passion, the energy which you bring to the table is just so incredible. It makes you believe that, India has a great promise ahead of itself. And in my mind, as we move towards rising formalization, supply chain transformations, digital adoption, it will continue to reshape the SMEs and how they operate. We believe that for SMEs to thrive, banking infrastructure for SMEs also should be faster, simpler, and more inclusive. So when we first launched Evolve, our vision was simple, just to create a platform where business owners like you could gain critical financial and business expertise and insights, interact with experts, and more importantly, just get to interact with your ecosystem. SMEs who are in different sectors, how they have scaled, how they have grown, what challenges they have encountered. They could give you some contacts. They could become your suppliers, vendors, partners, whatever in the future. Over the years, this initiative in our minds has exceeded all expectations, evolving into a movement that has impacted thousands of businesses across the country, because our SME friends and our partners are telling us that. Your enthusiastic participation and invaluable feedback in terms of how we can evolve this platform and how we can continue to increase the partnership which can get created through this ecosystem is something which we continue to look forward to. Over the years, as a bank also, we have made significant strides in digital banking, making transactions seamless and financial management more efficient for businesses. Whether it's our end-to-end digital lending platforms, cash management solutions, or Neo for Business. Neo is the name of the platform we've given to that. We continue to leverage technology to simplify banking for SMEs. To support MSMEs in their growth, we have also reimagined our lending process, focusing on speed, flexibility, and digital ease. If you're worried and you don't know, our head of credit is also sitting here. So if you're not getting the right answers, he's sitting somewhere in that corner. Please do talk to him and give him all the feedback you want. We obviously want to learn from there. As part of our commitment to be digital first, our Neo for Business app offers a seamless banking experience. We have spent a couple of 100 crores on it. It better be seamless, helping businesses manage payments, corrections, and banking transactions effortlessly, all in one place. With real-time insights and an intuitive interface, it simplifies financial operations, and we do believe that it is the best-in-class platform because the way we have created it, we have gone to the market, looked at what is happening in the world globally, and then created this platform in-house. And we have been at it for the last couple of years. It's not something which we've done overnight. And by the way, it's not done as yet. We've still got another 6-9 months to go before we get the trade finance side of the platform fully done. The person who's driving creation of the platform, 2 people are also sitting here. So if you have again any suggestions on Neo, Neeraj is one of them. Our head of digital banking is also sitting in the audience. At Axis Bank, our commitment, we believe, goes beyond banking. We are your partners in your progress, offering a full suite of services tailored to the evolving needs of SMEs. Whether you are seeking working capital solutions, trade finance, term loans, digital banking tools, we are there to support you. For businesses looking to scale, we provide access to investment banking expertise, helping you raise funds through IPOs, private placements, or structured finance solutions. Our wealth management services through the Burgundy platform ensure that as you build your enterprise, your financial future is also kept secure. From optimizing cash flows to mitigating risk to planning for succession, we offer strategic guidance along each and every step. Additionally, our dedicated SME advisory team is always ready to assist you in navigating market challenges and identifying growth opportunities. Through specialized lending products, customized financial solutions, and a strong digital ecosystem, we believe we empower you to focus on what you do best, building your business. As we look ahead, we recognize that learning and access to knowledge must not be confined to this event or platform alone. It must be available to you anytime, anywhere. That is why I am delighted to announce the launch of Digital Evolve. If you have not seen it, I will encourage you to go to YouTube and look for Open Dialogues. That's the one, Samir? So type Open Dialogues, you will see that we are already publishing a lot of videos around markets, geopolitical situation, currency, interest rates, what is happening in India and so on and so forth. We have launched something for women in banking. We are about to launch something for senior citizens. And this is about MSME. So it is not just something we are creating out of nowhere. We have been creating this platform for the last couple of years, and we are adding elements to it. The viewership on that is actually already quite high. And our idea here will be to bring experts and have a conversation with them and kind of publish it so that you can also kind of listen to it and learn from it. This new initiative will take this knowledge series beyond physical boundaries, while Evolve has been an excellent platform for connecting with SMEs in person. As I said, we wish to expand this initiative to reach a much larger audience. Digital Evolve will complement our physical events, featuring industry leaders, financial experts, and seasoned entrepreneurs. Digital Evolve will serve as a continuous source of learning, help you stay involved and keeping yourself ahead of the curve. As we embark on this exciting journey together, I invite each of you to leverage our expertise, engage with Evolve, and explore how we can help to take your business to new heights. Thank you for your trust in us. Thank you for your business. We just want more of it, and then we want all of it. We will not rest till we have all of it. And then we'll not stop there. I keep talking about the facts, not just your business. I want the customer ecosystem. Then I want your family, then your friends and extended circles, so it'll never end. This message is for the people standing at the back, the Axis Bank people. So thank you for a relentless entrepreneurship spirit and for making you all the success that it is today. Here's to attaining new heights together. At Axis Bank, we stand firm in our commitment for access for MSME, a vision where every MSME finds the right financial partner in its journey with us. Be it banking, lending, advisory, or digital enablement, we will continue to innovate and support your journey. We know we will grow only if you grow. We know we will thrive only if you thrive. We know we will succeed only if you succeed. Welcome to Evolve and welcome to the future of business growth. Thank you so much.
Thank you, sir, for all the valuable insights. We all look forward to seeing the digital version of Evolve. Building a successful business is a journey that requires time, dedication, and continuous learning. As the saying goes, success is not a result of a spontaneous combustion. You must set yourself on fire. With that, we bring to you a few of our very own clients who will share their insights, thoughts on future-proofing MSME for the new age. We have with us Mr. Sameer Shetty, President and Head Digital Banking and Web Channel Axis Bank, moderating this highly engaging panel discussion with our guest panelists, Mr. Anush Netherwala, Mr. Vipul Parekh, and Mr. Vivek Asrani. Please welcome Mr. Sameer Shetty onto the stage. Our first panelist is Mr. Anush. He is a third-generation industrialist, philanthropist, vice chairman of Netherwala Group. He completed his BSc honours from Manchester University, United Kingdom. Anush started his professional journey in the capacity of management trainee and subsequently climbed up the corporate ladder. He strongly believes in continuing his family legacy of touching lives through technology and creating enduring value for the society at large. Please join me in welcoming Mr. Anush onto the stage. Our second panelist, Mr. Vipul Parekh, a visionary leader and a founder of Gem Aromatics Limited. Its roots in the industry date back to 115 years. Started with a single product, Gem Aromatics now has a wide product basket of specialty ingredients which cater to some of the global giants in FMCG and pharmaceutical industry. Under his able leadership, Gem Aromatics has 3 world-class manufacturing units. Mr. Parekh moved into family business in the year 1981 to work alongside his father. He has played a pivotal role in shaping the growth and success of the company over the last 3 decades. Please join me in welcoming Mr. Vipul onto the stage. Our third panelist is Mr. Vivek Asrani, Managing Director of Chemo Industry and Chemo Fastener Companies. Mr. Vivek started his entrepreneurial journey in early 90s under the guidance of his father. He has come a long way from starting the business in small office at a Muhammad Ali Road to becoming the leading player in fastener industry in India with wide range of products catering to the industry need. Please join me in welcoming Mr. Vivek onto the stage. So ladies and gentlemen, we truly hope today's session is an insightful one for all of us and we'll be able to answer a lot of your questions. Over to you, Sameer.
Thank you, Tina, very much. And thanks everyone for joining. And special thanks to our distinguished panelists. It is my privilege to be here to spend this evening with extremely high energy group. They say India is a country of businesses and it is you folks who's helping us grow. And it is my unique privilege actually to be with three very distinguished gentlemen. Each has a great story, and hopefully today we will learn a few things from all of you. Lastly, also, I realize that we are standing between dinner and all of you. So we'll try to kind of keep this short and pithy. So let me start, Anuj, first with you. You run kind of multiple businesses, and this is the third generation. Also, I understand the fourth generation is also kind of joining. So what are your, let's say, 2 or 3 top insights on running a multi-generational business and ensuring that it is successful?
So, Samir, just to correct you, my kids are 6 and 5 and 7. So, if they've joined the business, that would be really admirable. But since my kids are young, and for me, sustainability is all about building the business in a manner in which it invites them into the business. And that it's not forced upon them as, oh, it's a family business, you better join it, right? And I've seen a lot of businesses that hit the second generation, third generation, and there's no interest in the business. So I sat back, especially during COVID, and rethought the fundamentals about what it means to be a family business from my perspective. And how do I bring the next generation into the business? So how do I transform the business culturally, in what it does, in the services we provide, in the values the business has, to align with the future potential values of my children or whoever the next generation may be, right? And that's when I kind of realized that you need to start to reshape the businesses individually, collectively, in a more holistic way. So your role then elevates up to a role of strategy, where thinking 25 years or 20 years down the road, what will the businesses look like to be able to bring that generation in?
Fantastic. So 2 things I take away from this. One is this having a 25-year view, right, and which is I would say quite extraordinary, because typically companies think in 1, 2, 3-year horizons, but you are saying that SMEs need to take a 25-year horizon. And second, the point you made around aligning the values of the generation with the company, which is another very critical point. Fantastic points. If I can move to Mr. Parekh, you and again, extraordinary story of growth and so on and so forth. So if you can just talk about the story of Gem Aromatics and how you've come to where you are today.
First of all, thank you very much for being here, inviting us on the dais, and it's been wonderful to witness this event. Although this is the finale of 9th edition of Evolve, but I'm very happy and privileged to be here in front of the management of Axis, and it's been a wonderful journey so far. This is a company which is run almost 5 generations now. This is my son who going to go to the 5th generation, and we have been into the business of chemicals ever since then. Coming to essential oils and aromatic chemicals, which is the key business currently which we are running, it's been there even before there was a closed door economy. I mean, most of us believe 1988 onwards, 1988, 89, when the economy opened up, till such time my father, grandfather and forefathers was to do business which was in licensing. So we used to import a lot of chemicals under the regime of so-called license Raj then, when it was a closed door economy. So we continued to, journey our business into import, stock and trade till 88, 89. And when 89, when the economy opened up, when the duty structures were going down, custom duties were brought down, that's where we thought of going in for manufacturing. So actually our manufacturing process started from 89 onwards till now. And I'm the 4th generation, my son is the 5th generation. So we started manufacturing from 4th generation. Ever since then, we have not looked back. Well, I lost my father when I was too young, and I had to shoulder a lot of responsibilities then. But with the grace of God, I thought it's a time now that we were very small. And I won't be shy of saying that MSME is always very small, they start small. And those were the days when, you can't afford professional talents, or where, you could really drive the business forward. So I was lucky to have my family, my wife engaging in the business, and that is what made us stronger, because there was somebody from the family to really shoulder the responsibilities, and that was what one of the very important factor for MSME, for small companies to really come up. So I value the presence of the family members, and I still would not shy to tell that it will be very nice for the family to come into the MSME business, where of course you grow with the business, you would then turn the professionalism, bring some more talent to the business, but I think it is very important for a business to have family members involved, which I have, and I'm very lucky to be so. So we have been into 5 generations in business, and today I think we are blessed, as every passing year we achieve a new milestone.
Extraordinary, extraordinary. Thanks a lot for sharing, Mr. Parekh. Vivek, if I can move to you. Yours also is a very inspirational story. You started with a small shop in Mohammad Ali Road, and you are now one of the leading players in fasteners. So if you can again, kind of from your journey, 2-3 takeaways that, people can learn something from, or your key learnings.
So, to start with, I feel like a baby on the stage with the 5th and 6th generation and the 5th generation. So my boys are 23 and 25, and they've just joined the business, and I was, kind of second guessing myself that should they or should they not join the business. I'm very heartened to know that the next 3 generations might still join the business. So, to quickly share the story, and every founder loves talking about their story, but let me only say to you what Elizabeth Taylor said to each of her 9 husbands: I won't keep you too long, don't worry. So, my grandfather came from Pakistan as a refugee, left everything back in Karachi during partition, started with 600 square feet near Muhammad Ali Road. 400 square feet was our house, 200 square feet was the office. This was in 47. My father started a factory in 59, and that factory was a small-scale industry, as we would call it in those days, SSI, ran successfully for 40 years. When I was 16, I had joined the business, so it had been 10 years I was already in the business, and I found that the business was going to shut down. We were competing with the unorganized sector, who were cheating on quantities, quality, taxes, electricity. And I was 27 at that time, and I remember saying to myself, I have 2 choices. Either I can be the best at being unethical and winning the game, or I can move up the value chain. So in 96, with a 50,000 rupee capital, I had to restart. So we had the factory, we had our home, we had a small office in Abdul Rahman Street of 250 square feet with all of 4 employees. And it was paying the bills, as we say, ghar ka kharcha nikal raha tha. So in 96, I started with 50,000, got into industrial stapling and nailing, fastening systems. And for the first it took me 5 years to reach a turnover of 1 crore. Because whichever dealer I visited, they would say, we don't know this product. And I visited more than 400 dealerships all across India: Bombay, Delhi, Chennai, Bangalore, Coimbatore, Pune. And I wasn't able to set up one dealer because no one knew this product. But we were getting inquiries from the end users wanting these industrial staples. And the first decision I made when I started with that 50,000 was that we will never bribe a purchase officer for business. And I will try and grow this company on ethical lines. And when I just about touched 1 crore, it took me 5-6 years, I was challenged. We were negotiating an order equal to our turnover. One of the most corrupt purchase departments I have ever come across. Private sector, not government. And I remember walking away, and we were all of 5 people in the company at that time. And I said, we've decided not to bribe, and I will not pay. And that one order could have doubled the turnover, and I was desperate for the business. I said, but having said that, what does it take for us to be market leaders? We cannot say we are good and we are losing. We have to demonstrate that we are good and therefore we are winning. Long story short, from 20 products, today we have more than 500 products. From no dealers, we have 200 dealers and 110 authorized service centers. Now, I'm not saying this to impress anyone, but one of the learnings for me was that when we anchor ourselves to certain principles which we make non-negotiable as founders and business owners, it unleashes our innovation and creativity. I could have taken the shortcut. I would have become bigger in the short term, but I'm not sure in the long term I would be sitting over here. The other thing which I realized is there's a difference between making money and creating value. And value is created not only by being ethical, but by being ethical and competitive. It's not good enough to just say we are good and we are losing. We have to win. I went on to then build the business. I thought I'd done a great job with institutionalizing our culture. And my senior most sales manager comes and says, look, there's this one customer, we don't sell to him. Let me take care of him. Only you know, I know, nobody else in the company needs to know. He's only asking for 3%. And I said to him, I said, great idea, let's do it. But let's just think a little ahead. I said, at some point you'll want to, grow in the company, at which time you will hand off this account to your one down. And then you will tell him, I'm telling you something which only you know, I know, and Vivek knows, and nobody else knows. At that time, that manager of yours, A, is going to stop believing everything he heard in the company from day one. Second, when he's under pressure, he is going to resort to exactly this, and there'll come a time when he'll say, we know Vivek doesn't even need to know. I said, you do the math. There is a loss of profit in not having the business. There's a loss of organizational culture once this cancer gets in, which is a bigger loss. Having said that, what does it take for us to win? Is it price? Is it quality? Is it delivery, service? It took us 2 years, we have the business. But the biggest learning for me in that whole experience was that when as MSMEs, we are willing to make short-term sacrifices, we create long-term value. And very often as owners, the dilemma, yaar, kar lete hain, fir baad mein dekhenge, but how can I let go of this? And I think that's been one of the big learnings. And I'll just end with one quick thing. We look at Tata's, Infosys, and I say this to our team all the time, they are forests. We are a blade of grass. We can never compare with them in size. I said, but we can be as green as they are. There is no reason why, as MSMEs sitting in this room, we can't be the same color as the Tatas, Infosys, and the Mahindras, and whoever we admire. Okay? And that, to my mind, is really the value creation and the essence. Anush, you spoke about the culture. That, because I tell our guys, we are spending the best years of our life and the best time of the day at work. You have to make it the best experience for yourself. I'll just end with one thing which I personally and as a company we believe. There is a lot of intellectual and financial capital in the world. We need to build the capital of compassion. Finally, business is all about people, and how we impact the lives of people through our businesses is for me what business is all about, and this journey is all about.
Fantastic. Great set of insights. I think if I kind of take the responses from all three of you, the things that strike me are one, a very long-term view. All three of you have taken a very long-term view. You are not thinking about the next 3 months, 1 year, etc. You're taking a very long-term view. Second is focus on culture and building something which sustains. And they say, right, like culture is what you do when nobody's watching you. And I think that's what all of you are kind of talking about. Let me move to the next question. The question is common across all three of you, which is you've been in industry for a long time. So what are one or two big changes you've seen in the MSME industry over the last 10 years? Maybe, Anush, we start with you.
So I think there's been a lot of evolution in the MSME industry, right? In the outlook, in the processes, in the capabilities, in every form of the way. If you looked at the MSME industry 10 years ago, it was an MSME industry. If you look at it, the same industry, even if it's the same turnover today, the outlook is very evolved. And I think that that also stems from next generations possibly entering the business. It stems from the education system. It stems from the values, right? And that's one of the core building blocks of any legacy is the values you inculcate. But one of the biggest risks of that as well is when we as leaders become stumbling blocks for our own business, right? And that's a very hard thing to grapple with, or to even admit that I am actually holding back the business. And that's when you suddenly realize that people are an investment. And if you don't invest in people who are much better than you at doing the work you need to do, you will always be firefighting. You will always be doing work that is actually not adding value to the long term. Bring someone else in to do the short term work for you and focus on the longer term vision. Focus on the strategy, right? And that is the evolution which MSMEs will slowly go through and are already going through this journey.
Great. Mr. Parekh?
To us, MSME, I feel it's a great word to be with, because we have grown through from small to medium to where we are today. But according to us, I feel MSME, we got to be, before time if you are where you are. In fact, to give you an example, we were at a very small number of about 100 crores when we thought of going in for SAP, and which was not required then, but we thought we were to catch up SAP ERP early as possible at a turnover of 100 crores. So now with 100 crores, if you are looking at going in for an ERP change from Tally, we would have continued doing Tally and do your accounting as an MSME, but we don't think on those lines. So I think, broadly speaking, MSME, yes, if you are before time, and today, if everything permits the way in which I look at it, there's a great potential where, you got to be very agile, flexible, and if all this compounded together, if you feel that MSME can do wonders, it can. And you can't do a business with the old thinking and still do business tomorrow. So we'll have to change the mode of thinking. We'll have to change, we want to evolve. There is an evolved. So we are already in the evolve even today, and MSME, I think it's very important to get evolved. Keep your business straight, pay taxes in time, ensure that your numbers are going to be flying high in the sky. So I feel MSME, there are a lot of challenges yet, but it's a great, I think, bandwidth to be in. And we have gone through, everybody goes through the process, so it's not that anything is like rocket science, but it's very important how you take your business forward, remaining under the umbrella of small and medium scale. And we have been successful with the grace of God. I think we have taken it right, and with all the help of bankers like Axis, which we should not shy again, saying that we have been having a great partner in us to take this business the way we are in from MSME sector. So we are very happy to be in continuing our relations, and we're still growing as we speak. So I think it's been a wonderful journey together. So as an MSME, we are very, very happy, and keep going. I think that's what it is.
Vivek? So Samir, I'm going to take that question in two parts. There is a whole section of MSMEs that are breaking away from the rest in their industry. They're breaking away from the pack. There are a lot of people stagnating in that 5 to 25 crores, and suddenly you have these companies breaking away towards the 100, 150 crores. Now, why is that? Is it that they've just been lucky? No. There are 4 factors that are driving that. Those companies that have managed their cash flows, their supply chain, their distribution network and brand, and are not dependent on only a few customers, and who have integrated digital in their operations and processes, have benefited at the cost of the marginal players in every sector. So whether it be a small company like ours, or whether it be a Fevicol, Asian Paints, and an Astral, we're all seeing a breakaway trend happening. To put it in perspective, our own company has more than doubled since pre-COVID. We are growing at a rate of 18 to 20% year-on-year CAGR over the last 5 years. Now, I'm not again saying that to impress anyone, but We were fortunate that these 4 elements were in place. And if you go back and map your own companies, if there is a stagnation or there is a challenge, chances are you might find one of these 4 is a problem. But I'm also going to give you the other side of what I'm seeing in the MSME sector, which is a huge concern as far as I'm concerned. There is a fatigue factor which sometimes I see entering the MSME sector. You know, we all get very excited when we're on a platform like this, but there are days when it's a challenge. The fatigue factor is coming in not because of the compliances. In fact, people like us benefit. It is the complication of the compliances which sometimes you have to deal with. The second concerning factor is the invisible cost of running an MSME. You know, we make our projections, we make our plans, and then you are dealing with a bureaucracy which is not necessarily, you know, marching in step with the larger policy. It's great to say make in India. You buy land in MIDC, try getting your electricity, try setting up a factory. That smile on Anusha's face says it all, right? We did our Bhumi Pujan only yesterday for our new export unit which we are putting up. And the third factor, which I am very concerned about, you know, we think we understand our business and our dealers and customers. We actually give credit without understanding we are in the business of risk management. And I keep telling our sales team, I said, we don't understand risk. Bankers get it wrong sometimes. Who are we to get it right? MSMEs are sitting on a mountain of risk management, which we somehow manage through our relationships with our customers and dealers. And every year we may write off a certain percentage. And I think that, to my mind, is a big concern area.
Great. So, if I were to just summarize again, huge progress over the last 10 years. And in particular, certain SMEs have become more formal, more digital, more process-oriented, etc., which is what is driving the growth. And this I am kind of putting from my side, which is a summary of the 3 things you said, is folks should focus on that. And if they don't, then likely they will face some challenges. I'll move to the next set of questions, and I'll start, Mr. Parekh, with you first, which is if you think of India's role and Indian SME's role in a global scale, particularly given this recent theme of China plus one, how do you think that's happening? What's happening, and what do companies like those around here need to do to succeed?
Wonderful question. I think this was what was expected anyway. So we, as my people who had already come and who have been good enough to give us the insight from the management, the banking management, they've already spelled enough, and I think most of us know the situation globally. The geopolitical situation has been in a risk the way in which today has been described with the US and the Trump tax and kind of the impact of all this changes, political changes which affected the economy globally. We feel there is a lot of chance for India as it looks like, because from an entrepreneur, from an MSME sector, we feel because we are in the business of flavors and fragrances, we manufacture the raw materials which is going into flavors and fragrance. Now this is the entry is difficult to get into this kind of vertical, but we feel very sure that India has a great potential, great prospect going forward. Looking at the global situation, which my friends have already been shared the numbers, the ratios, and where we stand in the global scene. But as an entrepreneur, as MSME, with the manufacturing of this kind of business, we feel that India, there's a lot of, I think, there's a lot of possibility of gaining more grounds. We are going to be in a very, very best situation with China plus, Europe plus. People are looking at India as a location to start their industries. They would want to have some connect. There are already people in place in India who would want to connect themselves with Indian companies, manufacturers. Moreover, when the Trump tax has been, that's people have been staring at that as to how things would move. We have been exporting. Over 60% of our top line is exports. So we have been dealing with exporters who are from US, They are the importing stuff from India. They are importing stuff from China. In fact, we export to China then to import. So for us, we find a concern that the manufacturers, particularly in our fraternity, they find it difficult with the tax being impacted and how it's going to be coming up. So nobody knows, but there is definitely a great concern of this kind of manufacturer, small, medium scale, who in China and otherwise, that India, this is the focus. The future of India is going to be great. We are very optimistic about the Indian economy. We don't budge to any financials globally with any other countries. With the head of the country like Mr. Modi, the way in which he is driving, we feel very, very optimistic. I think there could be a great future for MSME growth. We feel it's not going to be too far away when we would be 5 trillion, we cross 5 trillion economy, which is the objective. And we ourselves, it's a niche product. So it's not like a Me Too kind of a product. So our products are going into niche area. We are into suppliers to FMGC, we are suppliers to confectionaries, pharmaceuticals, different verticals. But we are, I think our product is not like usual. Like if ladies wants to go to the mall and buy some soap and shampoos and some lotions, they would want to see as to, how it smells. So the judgment of buying capacity of any of the household, they would want to go on the shelf and see as to whether this is how is it tasting. They don't know the chemicals going inside the product, but they know from the fragrance they could get from the flavor. So we, as an industry, feel that there is a lot of tailwind which is coming through for the growth story in India, and I think we are at the right place at the right time.
Great. Thank you, Mr. Parekh. Next question to you, Vivek. You spoke about digital and technology adoption. So if you can share some perspective on why that is important and maybe what difference has it made to you as kind of you have adapted this?
So, for us, the paradigm shift as far as digital goes came on the back of two things. Partly it was COVID. So we first learned Zoom and our teams learned how to, use systems at home, and all of us, the smile on everyone's face, you remember exactly, it's been 5 years now, right? You blinked and it's 5 years. So that was the first thing. But the second big trigger for our company is when I stopped looking at technology as a cost. And I started looking at it, A, as an investment, and B, technology was no longer an enabler, it was a strategic initiative in the company. We migrated sitting in our homes onto Zoho, which is, an ecosystem of 42 applications. So right now, from our accounting to CRM to analytics to HR, payrolls, everything is, on the same ecosystem. And let me give you 2 or 3 micro examples. Not only is our data real time, that's the easy one. We get, in an invoice, I get a line item wise gross margin. So sometimes if an account is highly profitable, I get to know that this particular product or SKU is below our threshold margin. The problem with averages is that the extremes get hidden. And that's what technology has done for us. That's one. Second is something very simple. I have a Zoho Sign app. Somebody in the office will upload a document. I have to just click my digital signature. It goes back and they now attach it to the remittance document and it goes through trade finance. Earlier, the paper would lie on my table. I'm not in the office. I have to sign it. Then they'll scan it and send it. So there is speed. Third is everyone in the company. And this is the advantage of being ethical, right? Which all of us are. Everything is in our books. So data is real time. Decision making is real time. The accuracy of decision making has improved tremendously. As a small company, for the first time when we did the cost analysis, I said that's a big number. But you know what? We've grown more than double from COVID times, thanks to the implementation of Zoho. So I think the paradigm shift of looking at it as an investment, but let me just say one thing for all of us over here. Technology and AI are great words. If you do not have a strong underlying process orientation in your company, please don't waste money on trying to make it digital. Because what are you going to digitize? You need to dovetail your processes into the digital application. So setting up of strong, robust processes becomes the precursor for any form of digitization that we need to do.
Great. Thanks for sharing. And Anush, last question to you, which is, Vivek mentioned this notion of technology. I mean, technology always comes at a cost. And so how have you thought about this in your business in terms of the adoption or not? And how has that helped you?
So I'm going to be totally honest here. We went through similar kind of journeys, right? Where you have your ups with technology, you have your downs with technology, and a lot of time it's more down than up, right? Because being old organizations, the thought process and culture isn't set. So the first fundamental is you have to start your education process. You have to start your evolution process. You have to start your systems, your governance mechanisms in place. We went forward with JD Edwards, I think, in 2003. Till 2019, we were still trying to implement it, right? And that too, just the base modules, because fundamentally the entire organization could not align to it. So I think what your case study of going live with Zoho through the whole of COVID is a fabulous case study, but I think it's a rare case study. Right, and I think a lot of people need to realize while it's an investment, it has to be intelligently done, as you pointed out. And if not, start with baby steps, right? Start with small platforms. Start to build your systems, processes, thought processes, outlooks to align with that. Start to have a decision-making tool where people realize the value of that decision. Today, when you put in a system like JD Edwards, if people don't perceive the value from it, they're not aligned to executing it in the right framework. So for some companies, you can go the whole hog. For some companies, you can go small steps and keep upgrading yourself as the evolution takes place. It depends on what stage of that life cycle each organization is at. And I think we've learned that the hard way. We're now doing an SAP implementation, which is the less said, the better. I mean, in one or two companies, it's going really good, right? In the other companies, they're struggling behind. Right. So that's the journey.
Right.
So, I mean, I'm just going to jump in quickly on, what Anush said. So, Anush, we had a very interesting experience. I was doing a review with my head of sales. He's been with me for 25 years. And we'd already implemented CRM for 3 years. And I started this review by saying, let's look at the Kanban in CRM. He says, oh, that's not updated, but I have everything in my diary. So here is my 25-year-old head of sales running my entire business. And I said to him, okay, meeting over. We'll only meet when you update the CRM. So he looks at me that, look, I've got all the information. I'm getting in the numbers. What's the problem? I said, the problem is you're not thinking scale. You're not thinking institutional. You're not thinking 10 years forward. Right? And sometimes you need to shock the system to get the system to change. And I'll quickly share one more thing, just so that we as MSMEs don't second guess ourselves. I sit on the board of a medical diagnostic company, which is a 1,000 crore company. The chairman is a very dear friend of mine. He had come over to the office and I was showing him around. Long story short, he calls up his team and says, I want you guys to come here. Reason being, we have now become a complete paperless office in order processing, remittances, everything that we do thanks to Zoho. I'm saying even some of the very large companies have a lot to learn from us, and it goes back to saying that we can be as green as they are or even better sometimes, As long as, and the last thing is, culture flows top down. If the top boss of the company is not willing to invest time in institutionalizing the digital culture, Anush, it will not happen if you don't put your foot down and say, but this needs to be done this way. So I just thought I'll jump in on that one.
No, thanks a lot. With that, we come to the end of a very interesting and exciting conversation. There are a few things I learned and I took away. First is this notion of a 25-year view And, as an example, in corporate world, that is rarely heard of, but great to think about a 25-year view. The second one is this notion of culture and aligning the value through the multi-generations. We spoke about doing short-term, taking some short-term trade-offs to build long-term value. And Vivek, you shared some great examples of that. And on, kind of how today India is in a great place, and particularly for MSMEs, there is great global opportunity if we do the right things. And the last one is on technology and digital. I think it's a little bit of, different shades for different people. And as you said, you have to be committed first to get there. And you may not get there in one go. You may need to take some baby steps and learn and, appropriately invest as well. So thanks to all the panelists for a very exciting and fantastic conversation. And thank you, the audience, for a patient hearing. Thanks.
Thank you, Sameer, and all our panelists for an extremely engaging session. With this, we come to an end of today's session. I would like to call upon Amitabh sir to hand over the mementos to our esteemed panelists. Now I would like to call upon my colleague, Ms. Swati, for the closing note.
Thank you, ladies and gentlemen. We hope you had an insightful session. I would like to extend a very special thanks to all our speakers for sharing their views on future-proofing MSMEs for the new age. We at Axis Bank salute the vital role MSME are playing for India's growth story, and we at Axis Bank reaffirm our unwavering support to the entrepreneurial spirit of our MSME customers. Please join us for cocktails and dinner. We hope you have a pleasant evening. Thank you so much.